I am excited to present everyone my dear Pauline Bishop, who is been in mortgages obviously for a long period of time. She is an integral part of our organization of R&J Capital Group. She helps everyone who comes across her way. So Pauline, thank you for agreeing to do this. I wanted to basically ask you a few questions today to see what you can share with the audience. Let's start with you. Just tell us a little bit about your, career path. And then I have so many exciting things to ask you, and more importantly, to hear what you have to say.
Great. So thank you very much, Robert. Thank you for that introduction. And hello, audience. Great to be here. As Robert introduced me, my name is Pauline Bishop. And just a little bit about myself. I've been in the industry for many years, starting from the bottom up with the ultimate part of being a broker owner myself. Through the years, I've seen so many changes in the industry. And Robert, you can also attest to that. It's been up, it's been down. We all saw what went on in 2008 with the turmoil in the market. Interest rates skyrocketed, house prices fell. Mortgages went underwater. So,
unfortunately,
it's been a turmoil. But now we kind of see it, kind of steadying out. Like I said, I've started in this business many, many years ago. I've been an opener, I've been a closer, I've been a processor, I've been an office manager, multifaceted. So I'm very versed in the industry. So we're here to share with you, our knowledge.
Yeah, no, thank you. And I can also attest that Pauline is great. She's a problem solver. We are going to, please stay until the end, because we're going to cover some life situations where people come and, have questions, or maybe already tried few other organizations that, give out mortgages, maybe whether it's a big bank or a smaller banker, and where people can't find solutions. They come here, and then Pauline is one of the, people who can put the deal together. So what I actually wanted to ask you, Pauline, first is, what do you see like the biggest challenge, I would say, that people have these days? And we're going to talk about, your processing experience in a bit as well. But my big question right now, when people call you and then you help, she's on my team, she's helping me with some of my clients as well. She's helping with clients of other MLOs here. But what is, I would say, one or two biggest challenges, and how do we help people overcome this? And you can choose whether it's credit or anything else.
Thank you for that question. Two biggest challenges that I face every day during the phone calls is employment, income-wise, different types of income, and also credit-wise. People, clients come in, their credit is, at a very low score. They think they can get, certain type of mortgages, which that credit score won't allow it. So we try to help them in building the credit score back up and, revisit us in a couple of months so we can, get them what they need, the American dream of owning a home. Another facet is income. Some clients, they go from steady income to self-employment, meaning they go from W-2s to self-employment, and in their line of work, they make way more income in their self-employment status, not knowing that that's kind of a negative, because you're going from a steady employment, and even though it's projected higher, it's kind of a minus in that area.
Yeah, because mortgage rules require 2 years of working for yourself
That
to be
is
considered.
correct.
So
That
okay.
is correct. So that would consider steady employment. They see the trajectory in 2 years. You're coming from, one income and you're trajecting high, so they can average it over the 2 years. So, that's a big area that, we see a lot of, decline in.
So you mentioned some credit challenges and maybe some income challenges, and you mentioned employment. So I'd like to just dissect so our viewers can understand this. And how exactly, well, let's start with credit. How exactly can you or, potentially people that, our organization works with, how can we help them fix the credit? For example, somebody comes with a credit score of, I don't know, I'm just want to make it up, in the 500s, say 570. And for their program, we need, a different number. What do you do, and what do our partners do, and how long does it take to make this workable?
Okay, somebody comes through with a credit score, say, of 500. For the program that they may be aligned with, they may need a credit score, say, 580. So they're 80 points away. Sometimes on the credit reports, there are open items that sometimes they're not aware of. That can bring the credit score down, meaning they may have a late payments on something that it's now into a collection status or a charge-off status, and they're not aware of it. So they can either A, bring that account current, or B, we can point them in the right direction to work with a credit repair person, and they can help them bring that credit score up.
Okay, so the credit repair agency. Okay. Yeah, obviously, we have some partners. I mean, I don't know
That
if
is correct.
You referred to them. Got you. So that's the credit report part, the credit score part. But also I'm sure there are some general things that you recommend. And by the way, they're listed on our website. What we call them do's and don'ts of
That is correct.
mortgage approval process, or when you enter the mortgage approval process. So maybe we can talk about this later as well. Now, can you please also tell us, you mentioned employment and income. Great. Any other things like, I don't know, family disputes, I'm just making it up, family disputes sometimes, where you can remember that the deal that wasn't working, suddenly you found a way to make it work. And then, also talk about, if I can ask you to talk about the different types of loans that you deal with on an everyday basis. Are they only conventional? Are they, government loans, or is there more? What do you see being the most popular product these days?
Before I answer that, let me just piggyback on the credit report. Sometimes someone may have a perfect credit history, but still has a very low credit score. Why? Because there may be what is called an overutilization of your credit, of your credit. So meaning that if you're approved for, say, credit limit of, say, $10,000, and you utilize $9,999 of that account.
Oh, wow.
Right?
Okay.
So that can also lower your score, because I've seen that. Where I was like, oh, no, I don't have any, late payments. I don't have any charge-off. But when you look at it, it's the credit utilization. So that's also a factor that can bring your score. So you have to be very cognizant in, when applying for credit for a mortgage, that you balance out the usage of your credit cards.
What if people don't have the money to pay it down?
if they don't have the money to pay down, they can maybe work with the credit agency and try to, the creditor, and try to, negotiate a lower payment or something like that. Stop using and then just try to keep paying to kind of like pay down the balance and, try to bring this score up.
Yeah. And then we have, again, for our viewers, we have what's called simulators. They can say, okay, you pay down X amount of dollars towards the credit card debt. How will that affect your credit score?
That is correct. Yeah.
And usually, you'll be surprised. Usually, we see it all the time. The effect is a lot more than even we expect. I don't know if you see. I've seen
yes,
it too.
I've seen it too.
I've seen it too.
Now back to your question, Robert. As far as the programs that are out there, everyone is on the internet, ChatGPT. Now we have all this AI out there, avenue. If you want to know question and answer to question, then ChatGPT, they're coming up. But that's just an algorithm that cannot physically look at a document to make a decision. So that's how you come, you need a live person because they can miss document. They're just seeing what is presented, but not, looking at it in depth.
So what you're saying, if I can understand, so AI is great to kind of get an idea, but if you want the specific details in our industry, it doesn't always apply.
Does not always apply.
Is that the message?
That's the message.
Okay.
You need a live person. You need hands-on to look at the physical document to know which way you can go.
Right. Pauline and I, we had situations where people, and I'll let you give more details, where people wanted to document income different way. One way didn't work, but we were able to find another one. I don't know if you want to elaborate.
Yes, we were able to find another way, and the person was able to, move forward. As far as the programs that are out there, what I'm seeing is more of a no-doc DSCR programs that are out there. Everyone comes in, and before you can say anything to them, it's like, okay, I need a DSCR loan. You don't know if you can qualify for another type of loan. Right. But because, again, the internet, they put in their information or put in the questions that they need answers to, and they just come in. So they call you, it's like, okay, I need a DSCR loan. It's like, okay, let's see if there are other avenues that you may qualify for, which would offer you a better rate, better, benefits to the program. But they just come in. So that's a lot that I'm seeing in DSCR loans.
This is Pauline, and thank you for this. You're making such a good point. In other words, if and I'm not just belittling the power of internet and or artificial intelligence. I think it's great. We all use it here as well, but they obviously cannot give you a loan yet. For sure, not now. Also, if the engine suggests that you take, let's say, a DSCR loan, for example, which is for investment properties, it doesn't know if you're going to what she just said. It doesn't calculate for you everything that might. Doesn't know the rate. It doesn't know other factors. In fact, if it takes the average rate and it doesn't work, maybe we here can offer a lower rate that now will put you in the qualification. And there are other methods to do this.
That is correct.
That the internet is not trained to do. So.
But we see it every day, Robert.
Yeah.
We see it every day.
Look, I think what since we're talking about AI, I think what it is doing now, and we don't know what the future holds, obviously, but what it is doing now, it's not really doing our job for us, but it's helping us to do our job better.
Better. That is correct. Yeah, I see that.
You would agree?
Yep, I would agree. Yes, I would agree.
So DSCR, I know it's popular, but what if it's not an investment home? And by the way, how often do you see people try to kind of manipulate the system and say, okay, I want a DSCR loan because they're not really they can't really document income, but in fact, it's not going to be an investment. It's going to be their primary home. Do you see that at all?
I see that, yes. And that's where
Then giving us the wrong information, you're in wrong intentions, because these days, again, thanks to the internet, thanks to AI, very easy to check. And, people get punished. Okay, the banks, by the way, just have not necessarily, what Pauline does every day, because, she has so many other responsibilities. But I get questions about this all the time. Hey, you know what? This borrower is representing this, but we found something else. It comes to my mailbox as a CEO. So it's if they do it, if the banks do it on the level of CEO, you have to understand it's a serious thing.
it's a serious audit.
So
It's a serious audit issue
yeah,
that can lead to repercussions. So
yeah, for everyone.
For everyone.
For everyone, us included. But
Yep.
so that's why we are going to be there, providing our due diligence. I'm enjoying our discussion, Pauline. I wanted to ask you this. No, thanks again for for agreeing to do this. I wanted to ask you this. You many years you spent as a senior processor, and how did the processing evolve over the years? And what do you think about our office processors? Without naming any names, they're efficient. They know what they're doing, and what is the relationship between the working relationship between the loan coordinators, loan officers, and the processors here in the office?
Sure. During my years as a senior processor, senior processor, it has totally evolved. Again, with so many programs out, documentation is kind of narrowed depending on the program type. When I was the processor, we were required, once the loan gets out of underwriting, we were required, A, to call the borrower, B, to go over all the conditions to the borrower, and then send a letter outlining the conditions and kind of categorize them. What goes for the borrower, what's the lender, what's the at closing conditions, and what's prior to funding conditions or funding conditions. So they were all categorized, and so the borrower looking at a commitment letter or an approval letter with 20 conditions, you kind of get like, oh my God, what's going on here? I provided all these documents up front, and now I have a commitment letter with 20 documents. What's going on here?
Yeah, why does that happen?
So we're required to, break it out. That happens if you provide a bank statement up front, but then there's a large deposit that wasn't documented. That goes to the underwriter. The underwriter reviews, okay, the deposit, it's more than 50% of your income needs to be documented. The rule of thumb is once there is a large deposit, if it's not a payroll, has to be direct deposit, has to be documented. Right. So they see that that's not caught up front, then it's going to come on the commitment letter. So it has to be documented. So, stuff like that happens. So that would make the approval letter lengthy. So we were required to break it out in categories, call the borrower, go over everything, make them understand, answer any questions that they may have at that time. Documents come back in, reviewed, make sure that it, captures the question or the condition. The underwriter send that back in. The underwriter reviews, make sure everything is good. So the process that I see here at R&J Capital is very streamlined. It's similar to what I've been doing. And Robert, I must say to you that your processor here are top tier. They're A1. They understand the process. They take on conditions when the approval comes back from the underwriter. They take on conditions that the borrower does not need to see. They can handle it. They have the documentation on file. They know where to go get the documentation. So that's one less item for the borrower.
So you're saying if they can find it without bothering the client, the borrower, they do that.
They do that.
Right.
They do that.
Yeah, that's good. It's great.
Yes, they do that. They're very experienced. So as to eliminate a lengthy letter out to the borrower who may, like I said, get frustrated. I've sent this to you. Why you need this? They don't understand the in-depth of a mortgage. They think that, okay, I provide this. Why are you asking me for that? I provide this, but they don't understand. So we're here to guide them, to teach them, and to make them comfortable. And, that's how your referral basis also, starts. So the processes here, they eliminate the conditions, even though it's the borrower, and they can obtain it, which we all know that everything is online. There agencies that you can pull. It may have been in the file before, or sometimes the underwriter may have overlooked a document that was sent in, or there's a document in there already, but they just needed something, and then you just call the underwriter and said, listen, this was provided. Why do you need this? Underwriters are humans like us. They can make mistakes, But some of them, they think outside the box. If the file is strong, meaning the credit is good, income is good, employment is steady, there's some conditions that the underwriter can, waive. It won't be detrimental to the sellability of the file, So there are sometimes that, just a conversation with the underwriter, phone call that can eliminate some of the conditions.
I'm thinking, I appreciate your kind words, and I agree with you. They are really, really just bright people, and, who love their jobs, and it's very important. We're almost out of time, but what I'd like to do, I just thought about this, and for our audience, maybe we can return soon for another session about the borrower experience. Just have a separate discussion about this, and please everyone, please stay tuned. We will make an announcement. But one of our next sessions will be about the borrower experience and how we can improve it, here, and how we can improve it together with the borrower community, with those who are applying for a mortgage. Pauline, again, thank you. I think it was great. It was very insightful. I'd like to also, for our viewers, please comment, engage with us, subscribe to our channel, and we will be back with you very soon. Anything in closing?
Well, audience, I want to thank you so much for tuning in. And again, you can reach out to us. Follow us on YouTube, Facebook, Instagram. Go there and you'll read a lot about R&J Capital, and also see what we have to offer here. Thank you so much again. Thank you, Robert, for having me.
Thank you. It was a pleasure. Thank you, guys. Bye-bye.
Thank you, guys. Bye-bye.